Hello, fellow midlifers. Welcome to the channel. Today I'm sharing how I purchased an investment property, a rental property, while I was unemployed. One of the advantages of investing in real estate is that you can purchase an asset using leverage or debt. You can put down a portion of the purchase price in the form of down payment, and the bank will fund the rest. You can put down 20% or 25%, sometimes even as low as 3.5% if you're using FHA, assuming you will live in it first to purchase an asset. These are called conventional loans, and in order to execute on this, you'll need to get approved for the loan. Banks use what's called a DTI, or a debt to income ratio, to qualify for this kind of loan. And so you will need to prove to the bank that you have income, more often than not coming from a job. When I got laid off, I still wanted to continue to invest in real estate, but I no longer had that income from my job. I tried to use my rental income, but it wasn't enough to qualify for a conventional loan. But I found another way to acquire a property and get a loan while unemployed. It was called a DSCR loan, or a debt service coverage ratio loan. So what is a DSCR loan? A DSCR loan is a type of loan that is secured by the income of the asset rather than the borrower's income. DSCR is equal to the net operating income divided by annual debt service. And annual debt service includes the principal, interest, taxes, and insurance. For example, a DSCR of 1.25 means the property generates 25% more income than what's needed to cover loan payments. Here's how DSCR loans work. Lenders focus on the rental property's cash flow, not just the borrower's personal financials. They are commonly used for investment properties such as multifamily, short-term rentals, or commercial properties, but they can also be used for single-family investment properties. In fact, for a lot of single-family investment properties, you can get a 30-year fixed-rate debt. And lastly, borrowers don't need to show W income, tax returns, or employment or pay stubs. Typical requirements of DSCR. Minimum DSCR varies by DSCR lender. I've seen them between 1.0 to 1.25, depending on the lender. The loan purpose should be for purchase, refinance, or cash out refinance of a rental or investment property. And interest rates are higher, and down payment requirements could also be higher compared to traditional mortgages. So let me give you an example. Let's assume the purchase price of a property is $120,000 and you put 25% down at 6.5 interest rate. The monthly rental income is $1,200 per month. Property taxes and insurance are $100 per month each, so that's $200. So the principal and interest each month for this loan is $569. Property taxes plus insurance is an additional $200. So to get the DSCR, divide the $1,200 monthly rent by the $769 debt service, which gives you a DSCR of 1.56, which is pretty decent. But make sure to keep in mind to run a cash-on-cash analysis to account for property management, repairs, and maintenance. So some advantages of a DSCR loan are there's no need for personal employment income. It also, another advantage is it's another layer of deal analysis. The loan underwriter will do their own research on the income of the property to make sure that the income will cover the debt service. Also, it doesn't require a lot of documents like tax returns, pay stubs, mortgage statements. And lastly, I've seen DSCR lenders who offer 30-year fixed rate debt for single family rentals. Some of them even extend to small multi-family rentals. What are the disadvantages of a DSCR loan? Usually interest rates are higher compared to traditional ones. Compared to traditional loans, expect interest rates to be 0.5 point to a point higher with DSCR loans. The second disadvantage is they usually come with prepayment penalties. You can do away with these, but you have to pay a higher rate without prepayment penalties. So what that means is that if rates suddenly come down, it could become very expensive to refinance. And another disadvantage is that some DSCR lenders ask for a personal guarantee. If you're interested in looking into DSCR loans, a quick Google search of terms like DSCR in and then insert your area should give you some options. I personally called about 5 to 7 of them and just started talking to them to learn more about what kind of DSCR products they have and if they have 30-year fixed rate products. So here's how I would advise you to vet DSCR lenders. The first is to ask for quotes from multiple lenders. The second is to look into the costs of DSCR loans. They could have varying costs, like some have higher origination fees than others. The third is I would consider the responsiveness of the loan officer. And the fourth is that I would consider DSCR lenders of other real estate investors, as well as DSCR lenders within your real estate community and those that are in your community that have experience with those DSCR lenders. I'm a part of the One Rental at a Time community, and there are DSCR lenders that are shared among the members of the community. Those would be good places to start. DSCR loans can be a powerful tool if you don't have a W-2 job or if you don't qualify for conventional loans. Maybe because you have reached the limit in terms of what you can use your job for in terms of loans. So that's how I was able to buy a rental property without having a job, by using a DSCR loan. It's not the perfect product since it comes with higher interest rates and sometimes prepayment penalties, but it can be a powerful tool for investors who want to keep building their portfolio even without W-2 income. If you found this helpful, I'd love to hear from you. Would you ever consider using a DSCR loan to buy a rental property? Or do you prefer sticking with conventional loans? Drop your thoughts in the comments below. I read every single one. And if you got value out of this video, don't forget to like, subscribe, and share this with a fellow midlifer who is looking to grow their real estate portfolio. Thanks again for watching, and I'll see you in the next one.